Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from Charts and Markets takes a look at what could be the first signals the markets are trying to find a bottom, along with a glimpse at oil and gold. Mark Faber from the Gloom, Doom, Boom report talks to us from Thailand. He examines the major forces shaping the markets. He believes the 1% who own most of everything may be asked to pay the price by the 50% who don't own anything. Ed Steer from EdSteerGoldandSilver.com complains about the manipulation keeping gold and silver prices down. Plus, at the end of the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh and Carl Data Solutions President Greg Johnston. We'll talk to Ross Clark right after this.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from ChartsandMarkets.com. Welcome back to the show, Ross.
Always good to be with you, Jim.
Ross, the Dow 50-day moving average is below the 200-day average. Is that a concern?
Well, normally when you would look at the death cross, that being the 20 or the 50 versus the 200, the first signal out of that is generally not terribly reliable, but once the prices bounce back and you get a second signal, that's more indicative that you've got a good rolling top pattern, and it can be pretty darn important. There's no question about that. And if we're going through a rolling top up here, really we topped on the end of January and did a retest in the September-October time window. We've got a market that's, as far as the big name stocks, has gone nowhere in the better part of 10 months now. And if we take a look at the broader market, like the New York Stock Exchange Index, I mean, it's already at this point down to the September of 2018 levels. So, its top is well in place. And the leaders that we had been having, on the NASDAQ with the FANG stocks, et cetera, through the spring, we look at the devastation that's been there in the last couple of months, and this is some of the hardest hits that you would see. Stocks like Facebook or Nvidia or Apple, the amount of money capitalization that's been lost here in Apple is just absolutely huge. You go from being $1 trillion company and now at $230 a share to trading now under 170. A lot of money's been given back. Now, we are getting oversold enough that it starts to get interesting down here. Apple, in particular, is in the process of just about giving back half of the gains from the 2016 low. And if people recall that we had a poor market in 2015 into the first quarter of 2016 in general. And for Apple now, the norm is that it gives back 50% of large-scale runs. And in this case, that will be around 162. So we're starting to get pretty close to what should be a support area. I'm starting to see some of the overbought signals, the same type that we saw actually in the latter part of 2015. So we could be setting up for a bit of a base here.
What's going on with gold?
Gold's managed to push through resistance. We'd been looking at the 1235, 1237 range as a key level. Managed to push through there this week up into the 1250s on the nearest active futures contracts. This is doing exceptionally well, especially considering that the U.S. dollar isn't really breaking down. It's going through a consolidation phase, and the gold is really leading the way far more than, say, the silver market. Was good to see in the second half of the week that the miners, the GDX, the GDXJ, are coming to life here. we're in a seasonally strong period for the precious metals, although, I think you're probably looking at maybe an interim high next week, and you can see a pullback from there.
Oil, the OPEC producers decided to cut back just over 1 million barrels a day. The price went up. But what about Rachel Notley's cut to Alberta Western Canadian Select? That really boosted its price.
Yeah, really brought that discount back, which is good. It's, clearly needed to see as far as that Alberta economy is concerned. But, this is not a lasting item as far as I'm concerned in terms of, helping prices on an international basis. It's just helping out the Canadian side of things, but we've got a long way to go. We've clearly, you're not going to take care of the problem, long-term problem, by a curtailment, which can be temporary. You've still got the whole situation of getting oil to port, and whether that's getting additional rail cars, which is going to take time, or pipelines, which just are absolutely on hold. I think what you can be looking for still is a short-lived reprieve rally bounce in the oil market, but generally the first rallies become failed rallies, so we're still waiting for that first rally off the bottom, and then a retest of the low. The stocks, though, if you take a look at the oil service stocks in the U.S. or these Canadian stocks, they've had such selling pressure that the seasonal tax selling pressure is pretty much going to be coming to an end here in the next week. And I think you could see a pretty decent bounce in the oil stocks. Not a beginning of a bull market, but I think enough to make it a tradable low off a mid-December low into a late December or January bounce.
Ross, thank you so much for chatting with us.
Nice to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Coming up on This Week in Money, Mark Faber.
Always consult your investment professional before making any investment decision.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Mark Faber, editor and publisher of the Gloom, Boom, and Doom Report online at gloomboomdoom.com. He's speaking to us from Chiang Mai, Thailand. Mark, welcome back to This Week in Money.
Yes, thank you very much for having me.
Mark, was much accomplished at the G20 meeting between the U.S. and China?
Well, as far as I can tell, it didn't accomplish anything, but, most of these meetings, nothing can be decided because people, the representatives of so many different countries are incredibly apart in what should be done, and most of them actually don't know what should be done to improve economic conditions of people around the world. I can tell you what should be done is to have less government and more free markets.
Is that ever going to happen in reality?
No. In reality, I think we have a very, split society. It's not so much in the USA Republicans and Democrats. It's between people who have nothing, which is essentially 50% of the population, and some people who have a lot, which is, say, 1% of the population. And that is also evident in other countries. There is the economy of the stock market, and as you know, the stock market, since 2009, they have done very well globally. Some peaked out in 2015 and some maybe 2017. Some stocks peaked out 2015, some 2017. And some in the U.S. and the indices in the U.S., they peaked out between the end of September and October 1, whereby the majority of stocks did not participate. But the point I want to make is everybody is focused on asset prices. The governments, they want to boost asset prices because they think that this helps or that this is good for the economy. But if you have nothing, what do rising asset prices do to you? Nothing at all. On the contrary, they make homes and rents more unaffordable for the majority of people. And so these people, they then kind of rebel. Some will call it kind of populist movements, and some just call it trend towards the left, which is understandable under the conditions that some people have made a lot of money and the majority hasn't participated much in the recovery at all.
Is that what the riots in France are all about?
Well, I think in France, yes, to some extent, but it's not endemic to France that the wealth inequality has increased. It's just maybe more pronounced in France, and they have already sky-high taxes. But I think, you know, we in Switzerland, in the 13th century, they went already and ransacked monasteries because the monasteries levied a 10% tax on the income of the farmers. We called it the 10% tax, the Zehnter. And this was a tax that the farmers had to pay. 10% of the crop had to be given to the monastery. And for that, they went and stormed the monasteries and destroyed them. And then in the end of the 13th century, they kicked out the Austrian overlords, the feudals, because they also levied a tax. So we had these uprisings because of taxes when they actually were much lower than they are now.
In the U.S.-China trade war, is President Trump just trying to level the playing field?
I'm sorry to say that Mr. Trump has actually, in some extent, been helpful for America in the sense that he scaled back regulation. And many of my friends in the U.S., they say, indeed, under Mr. Trump, regulation has gone down. But in terms of foreign policy, I think the problem of his and also of the administration is either incredible arrogance, like John Bolton, or ignorance, like Mr. Trump. And I don't think that the trade war against China is A, justified, and B, will help the U.S. I think, just looking at it superficially, since the trade war began, who has suffered the most? Well, the U.S., the capital market has gone down, say, more or less 10% from the peak. In the U.S., the shares are widely owned. They're owned by the pension funds, they're owned by corporations, they're owned by rich people and so forth. And as I said, the poor people, they don't own them because they have nothing. But basically, this decline in share prices is quite significant in terms of wealth impact. And I think as a result of that, the administration will have to tone down their rhetoric. But who knows? Maybe they think, if you analyze, the problem is they don't analyze properly what caused the U.S. trade deficit in the first place. It was overconsumption. What caused overconsumption in the U.S.? Economic policies that favored consumption. In other words, the Keynesian economists, they wanted to stimulate the economy at all times through policies that would boost consumption, when they should have created an environment that boosts capital spending.
How do you do that?
If you want to boost capital spending, you need to increase essentially your savings rate. In other words, the population has to spend less, so more money becomes available for capital spending. You have to also create an environment where it pays to conduct infrastructure expenditures or capital spending in America and not in China. In other words, if you build a factory, the environment in the U.S. in terms of labor market, in terms of the regulatory environment to build the factory, and three, also the land price have to be competitive. But if the three are not particularly competitive, then a corporation may decide, well, we rather open a business somewhere else. And then there's the question, in America, the markets are basically saturated. Where are markets not saturated? In China, and even more so in India, Africa, and so forth. So if you want to tap into the insaturated markets, into the low saturation markets like Asia, Africa, and so forth, I think you need to build a presence in these countries and not in the U.S. And I think this is the reason why capital spending has been lagging in the U.S. If you print money, it creates an environment of speculation, and you can speculate more easily in other stuff than in capital spending. In other words, you gamble on, say, cryptocurrencies. The profit can be possibly instant. But we have a combination of measures in the U.S. and policies that have discouraged capital spending. It's also discouraged knowledge and skillful people. You have thousands of people coming out of universities. They know everything about political correctness and social justice and climate change and God knows what. They know nothing about a job that would make money, and especially they know nothing about factory job that requires nowadays actually very skillful factory workers.
How is China's economy doing?
Well, I wished I knew precisely, and I wished I knew what kind of prospects they are. My feeling is that it is doing badly. There has been a deceleration of economic growth. There have been widespread losses in wealth management products and in all kinds of speculative activity. Because, Chinese and Asians are fairly attuned, or they are very eager to speculate. So a lot of people lost a lot of money in really crazy speculations, like cryptocurrencies.
What's happening with credit growth in China?
The credit growth has slowed down considerably. I think this is necessary, and they shouldn't revise it, or they should not revive it artificially. I think it's necessary for the Chinese economy to slow down and maybe have a recession and then rebuild once the excesses have been corrected.
What's happening with China's real estate market?
In general, it is also weakening, but some cities, surprisingly, have had markets that are still moving up, at least statistically. I think in Asia, and by the way in the US and Canada, the real estate markets have peaked out. they're already down from the peak. Now, the statistics may not show it because they compare real estate to a year ago. Compared to a year ago, some real estate is still up a bit. But in general, I think that over the last 6 months, real estate has come down everywhere.
If China's real estate market collapses, what are investors from mainland China likely to do with their real estate holdings around the world?
Well, I think that there are other factors that are important, but let's say if there is a problem in China, there will be margin calls in China because the Chinese have speculated on margin. In other words, they also bought properties on mortgage loans. The lending standards are actually in China a little bit tighter. But I think that if property prices go down in China, it will be a big surprise to most Chinese. And if they go down a lot, then I think that Chinese will think, well, what about if my holdings overseas also go down a lot in value? And so in general, I think that if property values in China go down, the tendency will be to buy less in the U.S., to buy less in Australia, Canada, and maybe to sell some of these properties.
Would that bring real estate prices down in the North American markets?
I think property prices in America over the last 3 to 6 months have begun to weaken anyway. The asking price is still high, but the transaction price is much lower. In other words, statistically, they don't show much of a decline, the real property prices and real estate. But in reality, I think a lot of property prices have already declined.
We'll have more with Mark Faber when This Week in Money returns.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Mark Faber. Mark, is China being proactive in combating economic concerns?
Well, I think the policy was designed to slow credit growth. I think the economists in China that work for the administration, they understand that the credit growth China experienced in the last few years is simply not sustainable. I think they also understand that the economy has become less export-oriented but more domestic-oriented, and that therefore some of the policies have to be targeted on domestic issues and not on international issues.
Are you investing in China right now?
Well, as you know, I have a diversified portfolio. And actually, a few months ago, when the Chinese market was near an all-time peak, I think it was August 1 to 3. In other words, I think in August, the economy began to decline in China. And I want to invest in China, and I have some investments, but I think it's premature to take a huge position because the market is down. So statistically, you could say, well, if the market is down so much, sooner or later it will turn up. Yes, that may be true under normal conditions. But I've written now this year several reports and said, in my view, a likely scenario is that the asset inflation that began in 1980-81 with bonds going up, stocks going up, real estate going up, art prices going up, collectibles going up, that this colossal asset inflation is now coming to an end. And if that is true, then asset prices will not just decline for 6 months or a year, but they could be declining for a long time. So I don't think there's a rush to buy anything.
Going back to what's going on in France and Europe, do you think the European Union could be facing a revolution?
Well, I don't think there'll be a revolution in the traditional sense that people will burn down the whole of Paris. And the problem with the democracy is you wouldn't know who to hang. You know, if you looked at the funeral of Mr. Bush yesterday, George H. Bush, then you have all these crooks in the first row of the church, and you have to shake your head. And, you know, the eulogy of the son, George W. Bush, was actually very good. He spoke extremely well. But to call his father the most honest and dignified American president in history and so forth is going very far. You understand? I'm happy for him that he believes that. But I thought, this is the disconnect I was talking about. You know, people are not against the Democrats and the Republicans. They're against both. Because there is a disconnect between the political class and what the typical household wants or have. And this is happening in France, happening in the US, and also elsewhere.
What are your thoughts on the euro and European markets?
Well, it's interesting. Today, a lot of these European stock markets have broken down. I mean, really badly. And maybe it's a false breakdown, and the markets will right away rebound and finish the year strongly. But in general, I think the valuations are lower than in the US, but the market action is simply horrible. Horrible.
The Brexit goalposts keep moving. Is this bad for the pound and the London stock market?
Well, I'm not sure that Brexit is bad for the stock market, it's bad for the pound. I would think if there is a clean Brexit, that this would be good for Britain. I think the whole euro is a failed construction, but the market is suffering from uncertainty because they don't know whether it will happen or not happen, and they don't know. And that's what I said right at the beginning of our interview when you said, well, what did the G20 achieve in Argentina? I said probably very little. And so far, you know, this whole negotiations between Britain and the EU has achieved very little. And what it has achieved is that most people don't like it. And so I think it might be actually favorable for markets if they would come to a clean decision on Brexit. I think Mrs. May is also unsuitable to lead the effort for Brexit.
Is there a person in mind that you have that would be a good leader to get Britain out of the European Union?
Well, he just resigned from UKIP, but Mr. Nigel Farage, I think, would be quite a good negotiator.
Where is private investment money going now?
Well, you should ask, where did private investment money go in the last 5 years? And then I will tell you where it will flow out. Money went among the more mature investors to equities mostly, and some into bond funds. And within the equity markets, the money flowed mostly into technology-related investments. In other words, the Nasdaq, the Russell 2000 and so forth, they significantly outperformed the overall market, or the S&P or the Dow Jones. So there was a bias to go into essentially FANG and FANG-related stocks. Facebook, Amazon, Apple, Netflix, Google, and semiconductor stocks, and other social media companies. And I think that's where the money will flow out. So that's a sector I would essentially reduce my positions in, or eliminate 100%. Where did the money go in? Also, among the young people, the millennials, it went all into these stocks I just brought up. Plus, more speculative issues like Snap and GE. And, of course, 30% of millennials, they had investments in cryptocurrencies. And so when you ask where the money will go to, I think a lot of money will go nowhere because it's been lost. The most cryptos are down something like 80% this year. I admit, even if, say, Bitcoins are below $4,000, more than a year ago, maybe they were below 1,000, so it's not so bad. But unfortunately, when Bitcoins were cheap, inexpensive, not many people bought them. And when they were expensive around the turn of the year, selling for around $20,000 per Bitcoin, that is the time of maximum investment into cryptos by the millennials. And there they lost a lot of money. And so that kind of investment, I think money will flow out. Where money also flowed out, in my opinion, not justified, is it flowed out of bond funds and of treasury bonds that have a low yield. So that, I think, will reverse, and people will buy high-quality bonds, some of shorter nature and some of longer nature, but they'll buy high-quality bonds. So it's not so much a question where will money go to or where did it come from. I think it's more a question of when will this happen and to what extent will it happen.
We'll have more with Mark Faber when This Week in Money returns.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange symbol CYP, the Pink's CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Mark Faber. Mark, what do you see ahead for the U.S. stock markets in the new year?
Well, I think my view was actually that the stock market had made an orthodox top on January 26, 2018, when actually the Dow Jones, when the S&P peaked out, I think it was at 2,740. And then for the year we traded sideways, but then in August and early September the market rose strongly and we made a new high at 2,940. But the high at 2,940 was not accompanied by the majority of shares. In other words, it was, as I said, the FANG and FANG-related stocks that boosted the index, whereas the typical stock was significantly below the stock market. The foreign stocks, they boosted the indices, but the typical stock did not make a new high. And I think the markets next year, 2019, will not perform well. I think most strategists will say, well, they will recover and make new highs, or maybe they'll move sideways and so forth. I think there's a good chance that the recent decline is the beginning, not of a crash, but of a slide of hope. In other words, 1973, 1974, we had a severe bear market, but no crash. The market went down for a week or 2 weeks or even for a month, and then it rebounded, and then it started to go down again and so forth. So I think this is a possibility that will just go down and or drift down, and by the end of next year we could have, say, an S&P that is down 20% or 30% from the recent high.
What do you see ahead for the U.S. dollar?
Well, I think this is now the most important question. I am skeptical about further dollar strength. I think the U.S. dollar has risen already significantly. As a result, U.S. industry is less competitive. And my sense is that the Fed, despite their relatively hawkish comments, the moment the stock market will be down another, say, 3% or so, they will kind of panic. And then they'll change their policies from quantitative tightening to quantitative easing again. And then the dollar will obviously weaken.
Do gold and silver look like they're going to get out of their long-term trading range anytime soon?
Yes, I also wonder. You see, in principle, I'm actually surprised that gold and silver and platinum have not performed better. Now, lately they kind of performed better than stocks, but that doesn't mean very much. And given all the money that was printed in the last few years and the uncertainties we have, I think they actually are acting badly. But can they move up next year? I have several technicians who assure me that they will, rise very substantially. It's possible, but as always, I have recommended to have some caution towards gold, silver, and platinum in the sense that I wouldn't put all my money into these assets. And secondly, if we really have this asset deflation I was referring to, this would be a new environment. In this asset deflation, it is possible that gold, silver, platinum would move up, but equally, it is possible that because there is pressure on asset prices, these precious metals would not move up. Maybe they would move down, but they would move down less than, say, equities and bonds. And by bonds, I would mean in this disinflation or deflation scenario, the high-quality bonds, in other words, say, treasuries in the U.S., would probably perform quite well for a while, but obviously not low-quality bonds. They trade similar to equities. In other words, if there was a deflation scenario, earnings come down and corporations' ability to pay the interest diminishes, and the high-yield bond market continues to be weak.
Are people around the world rejecting globalism and embracing nationalism?
You see, I'm not sure people really understand these issues. And, the other day I was listening to a speech by Congresswoman now, Alexandria, what's her name? Alexandria
Cassio.
Yes.
Yeah.
And, she has a point. She speaks actually quite well. And she has a point that, there are lots of people, Alexandria Ocasio-Cortez. A year ago, she was a waitress. She had no money and nothing, but she somehow managed to form a movement. This movement is neither democratic or Republican, but there are people who are not happy with the system. They're not happy with the Democrats and they're not happy with the Republicans. They're unhappy with Congress and they're unhappy with the fact that they work as waitresses and then they see every day the rich guys from Wall Street eating and drinking in their places and having these limousines and everything, so these people rebel, and this is globally happening, and to say they're against globalism would be wrong, because they came to the U.S. because of globalism. In other words, the immigration policies of America favored people like Alexandria Ocasio-Cortez to actually be in the U.S. and to make trouble. I'm not saying making trouble, but certainly she's shaking up the system, and we have to call a spade a spade. She's a socialist. She blames, and I can understand with limited economic knowledge, you have to do that. You just blame the rich people for your hardship. You don't consider why is it that wealth inequality has grown so much in the last 30 years. Well, I tell you why. If you print money, it boosts asset prices. So the people that already own assets, they benefit. But the people that don't own assets, and as I told you, more than 50% of the U.S. has no assets. So these people then lag behind, and then they become unhappy. But since they don't understand anything about monetary policy, nor does, by the way, Mr. Trump, and that's why he has so much sympathy among some people. He is a completely ignoratus. He doesn't know anything. But he claims he knows. And he has to be fair to him, some political instincts and some common sense. There's actually knowledge. He doesn't have very little about geography, about history, about economics, about anything he doesn't know. But he has some common sense. Anyway, these people who have been left behind, they rebel and think that the answer to their problem is to take money away from the rich people. And I'm telling you, this is going to happen. The wealthy people will be taxed more heavily in future. Trump and his tax cuts will not stay permanently in America. There will be a time when other leaders will increase taxation massively, not a little, on the rich people. Or they'll take things away from rich people. That is another possibility.
Is the Federal Reserve likely to move higher or lower from here?
I think the Fed will increase rates on December 15th, provided the stock market doesn't collapse by, say, 300 points on the S&P here, or another 10%. If the S&P in the next 2 weeks collapses by 10%, which is not my expectations, but if it does, I don't think they will increase rates. But if the S&P holds here, or I have some technicians, they tell me that the S&P will rally strongly towards the end of the year. Possible. New highs? I don't think so. But a rally, from here, we're at 2,646. The high was 2,940, so we could easily rally 100 or 200 points. And under those conditions, I don't think he will increase. He will refrain from increasing rates. So my base scenario, yes, he will increase rates. But next year, I think he will stand put and most likely not increase rates.
Is there an inverse relationship between interest rates and stock markets?
Look, with these correlations, there are times when stocks and bonds move together. I'd say 1981, 82 to today, or until recently, stocks moved up and bond prices moved up. In other words, interest rates went down. And there are times when both stocks go down, not necessarily in real terms, but they went down, like in the 70s, interest rates went up, and stocks trended lower. They didn't collapse. They ended 1982 at about the same level than in 1964. But then we look at the total return, which for bonds includes the interest, and for stocks, the dividends. The returns in the 70s were not terrible. They were not good, but they were not terrible. And I think that there are times in the last 2-3 years when the stock market sold off sharply, bonds rallied. It's like in the last 2 days, stocks were down, but treasury bonds rallied. High-yield bonds didn't rally much. They increased a little bit, but not as much, because high-yield bonds are like equities, essentially.
What do you see ahead for the bond market and mortgage rates?
Well, I'm long treasuries, not because of great conviction. I think the treasury market, from a longer-term perspective, is not particularly attractive. But you understand, in the initial decline of the stock market, I think treasuries can rally because they were very depressed. You know, we've gone down in the treasury bond prices significantly. In other words, yields went up on bonds, and they became very unpopular, and the short positions are very large. So, as an example, there is an ETF about long-term treasuries. The low on this ETF was around 112 at the beginning of November. We're now at 118. So in other words, we're up 6 points in a time when most investments went down. But before that, since January, these treasury bonds, the ETF, was of course down. So I think as a diversification, I would hold some treasury bonds.
Does residential mortgage credit contraction tend to trigger recessions?
Well, in America, in cities like Seattle, San Francisco, Los Angeles, Denver, where we had huge home price increases, as well as in Toronto and in Vancouver, real estate prices are coming down a little. How much more they will come down, who knows? I think they will come down quite a lot more.
Is the U.S. due for a recession?
Yes. This is one of the themes I'm making, and I want to explain this very briefly. Compare two economies, economy A and economy B. Economy A has a GDP of 100 billion, the same like economy B. But economy A has a stock market capitalization and bond market capitalization of combined $10 billion. So the capital market is 10% of the economy. $10 billion market capitalization of bonds and stocks, and the economy is 100 billion. Economy B has also, as I said, a GDP of 100 billion. But the stock market capitalization alone is 150 billion, and the bond market capitalization is also 150 billion. In other words, in economy B, we have a GDP of 100 billion, and the capital market of 300 billion. Now, in economy A, the stock market and the bond market declined by 10%. Okay, we go from $10 billion to $9 billion. On the $100 billion economy, this is meaningless, has no economic impact at all. But on the $100 billion economy B, if the stock market and the bond market declines from 300 billion by 10%, we're talking about $30 billion roughly. That will have a huge impact on the $100 billion economy. And so today, as I brought up before, we live in times of inflated asset values. Consumer prices are up, but not that much. But asset prices are in the sky, and if they come down, because they are so much larger than the real economy, if they come down, they will hurt the real economy.
Is inflation likely to be an issue going forward?
Well, first, we would have to spend 2 hours to explain what inflation is. There's inflation in consumer prices. As I said, there is some, but not in goods prices. There's consumer price inflation in services, notably in health care and in rents and stuff like this. But there has been this huge inflation in real estate prices. And you live in Vancouver, you should know that. And so now I'm trying to explain that this huge inflation in real estate prices and in stocks and in bonds and in everything in art, that this is going to come down. And when it comes down, that it will cause economic damage. And so the answer to your question is the consumer price inflation may pick up, and most likely it will not. But the asset prices inflation, that, in my view, will deflate and deflate badly.
Do you see gloom ahead for Canadian real estate?
Yes.
How bad?
Well, I think, how bad, who knows? But I would say a 30% drop easily.
Canadian businesses have one of the highest debt service ratios in the world. Is this a concern for Canada?
Yes. If business turns down, you have two companies. One has no debt and one has plenty of debt. Or one household has no debt, another household has plenty of debt. The company with no debt in a business downturn, okay, and the household with no debt, they do not suffer much. But the company with a lot of debt and the household with a lot of debt suffer very badly. That's why I think if asset prices come down, the recession is baked into the cake.
Canada is being left behind as the U.S. economy continues to soar. Canadian household credit growth is slowing. Real estate sales are down, auto sales down, interest rates rising, banks constricting credit. If you were the Prime Minister of Canada, what would you do?
Resign.
And what better policies would you bring in if you were Prime Minister?
Well, the problem is the politicians today, they're not necessarily responsible for the mess we're in today. The mess we're in today has been created not in one day, but in 30 years by central banks' liquidity. And these inflated asset prices, the Prime Minister, he can decree policies that kind of support asset prices, in which case the Canadian dollar will become weaker and weaker. Or he can implement policies where he tells the Canadians, most Canadians will not like to hear it, listen, you have to tighten your belt. We're going to head into 3 years of bad economic years, and tough luck. We all will earn less. Our asset prices will go down, but we have to face the reality that we live beyond our means. No politician will get elected with these kind of words, believe me.
Is Canada likely in a recession?
Well, I don't know. You have to ask the Canadian economists. As I said, the real estate prices are already down, not by much considering from where they came from. The mining sector is doing badly, and the oil and gas sector isn't doing very well either. So my sense is that it may not be in a recession, but it's also difficult statistically to measure precisely what the recession is. But I don't think it is in a growth mode.
Mark, thank you so much for being on This Week in Money.
Well, it's a pleasure for me. Thank you. Sorry, my outlook is not more optimistic.
Well, unlike politicians, as you just mentioned, you're not scared to tell us the truth. Mark, thank you again.
Okay, thanks a lot. Bye-bye. Bye-bye.
My guest has been Mark Faber, editor and publisher of the Gloom, Boom, and Doom Report, online at gloomboomdoom.com. He was speaking to us from Thailand.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Ed Steer, founder of EdSteerGoldandSilver.com. He's also director of GATA, the Gold Antitrust Action Committee. He's speaking to us from Merritt, BC. Ed, welcome back to This Week in Money.
Well, thank you for having me on, Jim, and good Friday morning to you and your listeners.
Ed, do gold and silver look like they're beginning to rally for a move higher?
Well, they're certainly making that attempt, but you can just look at any chart pattern on gold and silver and see that these rallies are being met with certainly some resistance. And they certainly want to fly. All the conditions are there for precious metals to move monstrously higher. But as we've discussed before in the past, J.P. Morgan Chase in particular has been sitting on precious metal prices now for quite some time. And it will be up to them to decide how high they go and how quickly they go. But all the ingredients are for a massive move in the precious metals is in place.
If they start to move higher, will silver really take off faster than gold?
Absolutely. As silver analyst Ted Butler has been going on for the last 10 years, once J.P. Morgan took over Bear Stearns back in 2008. They've been principally controlling both gold and silver, but mostly silver while they've been accumulating massive amounts of the stuff. And if they decide that they're going to stand aside and not go short this next rally, then silver will vastly outperform gold, and we'll see moves in that precious metal that will just frankly take your breath away.
Are you shocked that silver hasn't gone up higher because it's used as an industrial metal, especially in China where solar panels have really been booming?
Well, certainly. I mean, it's an industrial metal with an investment kicker as well. But as I said before, and I'll say it again right now, until J.P. Morgan decides to let the price go, it doesn't matter what industrial demand is or investment demand. At all. They're going to control the price, and until they get off it, silver is going to do what it does right now, which isn't very much of anything.
Is J.P. Morgan doing what the Hunt brothers did back in the 70s when it came to the price of silver?
Well, it certainly does look that way. They've accumulated far more silver than the Hunt brothers ever did or Warren Buffett ever did. They've got, you could take a look at the COMEX warehouse stocks. They got 150 million ounces there. And Ted Butler, who's, the world's expert in silver, figures they've got another 650 million ounces stashed away out of sight. They've been skimming out of SLV and bullion coin sales and things like that. So their efforts in cornering this physical silver market make the Hunt brothers and Warren Buffett look like rank amateurs.
Is there anything silver investors can do about that?
Well, I would suggest that, since J.P. Morgan is buying all the silver they can get their hands on, that would be a good idea for everybody else as well. And having said that, everybody like myself and yourself and most listeners out there are already loaded to the gills with all the physical silver and gold and precious metal stocks they ever want to own. And all they want for this thing to do is take off. And you can go out and buy more physical metal if you want, but most people have, like I said, got all they want. They're just waiting for this thing to end, as I am.
Did cryptocurrency mania strip away money that would have gone into gold and silver?
There's no question about it. Everybody jumps on the latest fad, and cryptocurrencies certainly were that earlier this year. And of course, the bloom has really gone off the rose in the last month or so. But one thing I can point out is the fact that once there's a new investment vehicle out there that looks like it's going to produce blockbuster returns, meaning the precious metals, you can rest assured that all that money out there that's looking for a place to invest in something that's the next hot thing will be in the precious metals instantly. And that will be reflected, A, in the silver price, and B, certainly in the precious metals mining shares. And the longer they keep the price suppression scheme going, the more rapid the rise is going to be when all that investment money starts looking for a home, and it won't take much to send the prices rocketing.
We'll have more with Ed Steer when This Week in Money returns.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Ed Steer. Ed, are physical and paper gold and silver in demand now?
Well, if you take a look at the physical demand right now, I can tell you that physical demand is pretty much zero everywhere. There are mint sales. I know the Perth Mint had a good month last month, and the U.S. Mint had just a terrible month all around. Mostly people just are sitting on their hands. They got all the physical silver and gold that they want. And all those sales look reasonable compared to what they were 3 or 4 or 5 years ago. They're just basically in the dirt right now. Everybody's just totally turned off the precious metals, and if there ever was a time to buy, and you haven't bought yet, this is the time to do it.
What's better to hold, a paper certificate or actual physical gold or silver?
There's precious metals in your hand is the only way to go. If you have a paper certificate for gold or silver, it means you own absolutely nothing. And if you do have a paper certificate, I urge you to convert it into physical metal just as fast as you can. But physical metals is where it's at.
Why would you want the physical rather than the paper?
Because you actually hold it. If you take a look at the document that says you own physical silver and you can exchange it for your piece of paper for that, I would bet someplace in the fine print that they have the option of paying you out in cash if they so desire. So I'm very suspicious of that sort of thing.
Does the U.S. dollar need to drop in value for gold and silver to break out of their current trading range?
Absolutely not. It means absolutely nothing in the grand scheme of things. All that matters, and I'll say it one more time, is what J.P. Morgan does. They control the precious metal prices in the COMEX futures market, and regardless of what the currencies are doing, if they decide that they want prices to go down, they go down. And if they want them to rise, all they have to do is back off and do nothing, and prices will rise. So precious metal prices are totally independent of the U.S. dollar, no matter what anybody else says.
How's the HUI, the Gold Bugs Index, looking?
Well, it's certainly put in a bottom. I certainly hope it has. I know that there's tax loss selling this time of year in the U.S., and that's not helping things. But it's, as I've said in my column over the last week or so, on the down days that we've had in the precious metals, and there have been quite a number of them, is that the people selling these shares for tax loss purposes or in a panic or for whatever reason they're selling them, I can absolutely guarantee that who's ever buying them are the strongest hands of all, because they know perfectly well what's coming at some point.
Is the Shanghai Gold Exchange having an effect on the gold market?
Well, normally you would think so. However, they are the largest gold producers. China's the largest gold producer in the world, the largest consumer of gold in the world, yet they have no control on the pricing, even though the Shanghai Gold Exchange, has huge withdrawals every month, and I had something about that in my column this morning. The fact of the matter is, and I'll go back to what I just said in your last question, the price is set in the COMEX futures market in the United States, mostly by J.P. Morgan. Until that changes, it doesn't matter what's going on in the Shanghai Gold Exchange or any other exchange in the world.
Would you think that China would have more influence because of their major position in gold?
You would think that, but like I said, go back, sound like a broken record. It doesn't matter what happens in Shanghai or London or Moscow or Hong Kong or wherever. It doesn't matter. It only matters what's happening in the COMEX futures market in New York and what J.P. Morgan is doing. That's all.
Are China, India, and Russia still snapping up every physical piece of gold they can lay their hands on?
Well, China certainly is, and of course Russia, over the last, 3 or 4 months, they've been adding 30 million ounces of gold to their reserves every month. India is the second largest consumer of gold, maybe not for their own central bank, but the people of India are huge consumers of gold. And between those three countries, they count for just about all of the physical gold production that's dug out of the ground every year. So you'd think that would have an effect on the price, and it should have an effect on the price. But like I said, the prices are being managed in New York, and I won't bring up J.P. Morgan's name again.
We'll have more with Ed Steer when This Week in Money returns.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're speaking with Ed Steer. Ed, does the Silver Sentiment Index look like it's bottoming?
Well, for those people who don't know what the Silver Sentiment Index is, it's a proprietary chart that Nick Laird, my chartist in Australia, made up for my column, and it includes the 7 largest silver producers in the world. And like the Huey and the gold stocks, it certainly looks like it's bottoming as well. And it's down, 60 or 70% or 80% from its highs of about 6 or 7 years ago. And like the Huey and the gold stocks and the gold price, once silver starts to fly, you're going to see the Silver Sentiment Index turn on a dime and scream higher. It's just a matter of when, not if.
Are gold and silver stocks showing strength during tax loss season?
No, they're not. Like I said, we just discussed, it looks like we're seeing a bottoming pattern here, but, despite the fact that it is tax loss selling season in the U.S., they're still trying to rally, and, if looking at gold and silver prices today, they're up a fair decent amount, and if they ever decide they're going to fly, then the stocks are going to take off too. And the bottoming process, as far as I'm concerned, is pretty much over for the year now.
How do you personally invest in gold and silver?
Well, as most of my readers know, I've been all in for probably 10 years now. I own a very significant number of silver miners, and I have several mutual funds that hold precious metal stocks, gold, silver, platinum, palladium. I own physical metal. I'm got all my bases covered, and like everybody else out there who's listening to this program, I'm just waiting for you-know-who to get their foot off the price of the precious metals so they can finally have their day in the sun.
Are they still finding giant golden boulders in Australia like they did on Australian Father's Day?
Well, you know, these things do crop up. They do get lucky every once in a while and find one, and it makes spectacular news and great clickbait in my column. And they're always nice to look at, and they give you the warm and fuzzies. But as far as major gold deposits, there hasn't been one discovered for a very long time. And the fact of the matter is that there are no large deposits left to be discovered. And if they do stumble across one, you're looking at, 5-10 years before it ever comes into production. So it's only a matter of time before we reach peak gold, and if we're not there already.
Ed, what's new with the Gold Antitrust Committee?
Well, you know, Bill and Chris were at the New Orleans Investment Conference back in November, and both of them spoke there. And Chris and Bill and myself do interviews on either TV or, you know, through web-based services such as yourself, getting the word out there. But the fact of the matter is that anybody whose job doesn't depend on them not knowing it basically knows that the precious metals prices have been actively managed by the bullion banks of the world for the last 10 or 20 years or even longer. And we're basically preaching to the choir now because it's a well-known fact. But we're going to continue preaching until this thing finally ends, and it can't end soon enough for Bill or Chris or myself or for Ted Butler either, because on behalf of all silver and gold investors out there who are long suffering, we just want this thing to get over.
Ed, how can people find out more about your newsletter?
Well, they can just go to my website, edsteergoldsilver.com, or just Google my name, Ed Steer, S-T-E-E-R, and my website will pop up, and they can click on it, and they can read my sample column and decide whether what I write about is of interest to them or not. And the freight is US $100 per year for about 240 columns per year.
Ed, thank you so much for being on This Week in Money.
Thanks for having me, Jim.
My guest has been Ed Steer, founder of EdSteerGoldandSilver.com. He's also a director of GATA, the Gold Antitrust Action Committee. He was speaking to us from Merritt, British Columbia. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Mark Faber, and Ed Steer, and thank you for listening. If you have any questions for the show, you can send them to info@howstreet.com. Now, stand by for company showcase updates from American Manganese CEO Larry Reaugh and Carl Data Solutions President Greg Johnston. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with American Manganese CEO and President Larry Reaugh. Larry, you've been outside the confines of the office this week. What's going on in the real world?
Well, that's a good question. I've been in meetings, and it's exciting. We're meeting with a company on maybe potential synergies, and I like what they got. They like what we have, so we'll see what happens. But nothing's concrete at this point. And one of the articles I read last year was investigations into the short selling and how much damage it's doing to the markets. And it's a little too late, to really start looking at that. The time to look at it was back 3 or 4 years ago. But they're having a ball out there shorting stocks, and people remember I did a lot of expose on that a couple of years ago, and that's enough said about that. But I'm glad to see they're looking into it, and maybe we can get the markets righted again. Dow's down another close to 600 points a day, and that seems to be a continuing trend. But I think when it turns around, it's going to turn around with a snap. It looks like a sharp decline and probably a sharp rally. The battery industry, well, recycling's starting to get its share of the news. There's lots of talk on recycling. They're looking at it again now as potentially being profitable. We've known that for 2.5 years, or we would never have gone down this road. And but anyway, it's good to see that everybody else is starting to look at that potential rather than saying there's no money in recycling batteries, which is nothing could be further from the truth. It's like saying there's no money in a 2-ounce gold project that's can be mined by open pit. And that's virtually the way I'd like to look at recycling the lithium-ion batteries with cobalt and nickel, manganese, NMC. There's lots of money in that, and there's a lot of interest. People are getting very concerned about what's happening to these batteries. Most of them ending up in landfills or being burnt, and with a little bit of, with maybe 50-60% of the cobalt coming back, and the rest going into slag. So I think we're in the right place at the right time, and I think that the shareholders that have stuck this ride through will see benefits next year. And, I'm certainly looking forward to the market next year. We've got enough money from this last closure on the private placement. It'll see us through well into next year, and but I think the markets will be better. And we'll close that private placement hopefully within, I won't say within a month, because it's Christmas and New Year's is only that period of time. And we're going to lose a couple of, days, a couple of weeks of productivity. But that's I had to leave a meeting to take this call because I always like to be available for the podcast. And, I think, everybody's going to be happy with things as they start to break. We've got our patents that should be coming due any time. We should be getting the notification on that. We got other things that are going to happen. The pilot plant will get started this month. Things are looking up for us. It's great. That's about all I got to say right now because my mind's on the meeting, but I wish everybody a happy weekend, and I'm looking forward to a break.
Larry, for people who are new to American Manganese, maybe just give us a brief sketch of the company.
American Manganese is a critical metals company that developed a disruptive process for treating very low grades of manganese, 2 to 3%, which the biggest deposit in the U.S. is that grade, and it's in Arizona, and we've done our feasibility work on that. The price of the metal, or the metal and dioxide, have to come up some more before that becomes feasible. But as things would happen, Cometco looked at the chemistries of cobalt, and they thought that we could actually recycle lithium-ion batteries and get all that material out. And we've done a proof of concept and a lot of a year and a half of bench scale work to prove that concept. So we're moving ahead with that. That's a resource that is virtually untapped in any with any methodology of getting out most of the valuable metals. So that is how we ended up in the battery recycling, lithium-ion battery recycling effort. And we're traded on the Toronto Stock Exchange Venture under the symbol AMY. We're traded in the U.S. under the symbol AMYZF, and in Frankfurt, Germany, under the symbol 2AM. The company has a website with all of our information on it. It's called AmericanManganeseInc.com. You can contact myself at Reaugh, R-E-A-U-G-H, at AMYMN.com. Or you can phone the office at 778-574-4444.
Larry, thank you so much for the update and good luck with the meeting.
Thank you.
I've been talking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on December 7th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Greg Johnston, CEO and President of Carl Data Solutions. Welcome back to the show, Greg.
Hi, Jim.
Greg, Carl Data has just completed an integration of some of its hardware systems. Can you tell us about it?
Yes. About a year ago, we did an asset purchase of a company called AMY Embedded Systems. And then in the summertime, we did a purchase of a company called Astra Smart Systems. Both of those companies we purchased, and there's a lot of complementary technology there and a lot of complementary talent. And so what we did was we integrated the two, and we're happy to announce that we've completed that. We've also received additional funding to build out our hardware lab in Trail. That's where Astra Smart Systems is located. So there'll be our hardware manufacturing research and development center is well on its way to completion up in Trail.
How about revenue coming in versus the costs you have to pay out?
After acquiring Astra Smart Systems back in June of this year, we had to do some consolidation, and we've managed to get complete that consolidation and shuffle some people around into different departments. And I'm happy to say that revenues overall since the acquisition are up 30%, and our overall operating costs are only at 10% increase. So we're doing a good job at integration.
Greg, for people who are new to Carl Data Solutions, what does the company do?
We're an IoT company, or Industrial Internet of Things. We create and monitor environmental sensing devices that are critical to infrastructure for big companies, industries like mining, oil and gas, as well as city infrastructure, so sewer and wastewater, stormwater management. We have a software back-end platform and a SaaS-based application that allows companies, data analysts, engineers, people that are interested in looking at those and monitoring that infrastructure in real time. We deliver dashboards and report and notifications to all of our clients in real time.
Greg, where is Carl Data traded?
It's traded on the CSE. The code is the CRL, and the ticker on the OTCQB is CDTAF.
And how can people get more information about your company?
They can send us an email at info@carlsolutions.com.
Greg, thanks a lot for the update.
Thanks, Jim.
We've been speaking with Greg Johnston, CEO and President of Carl Data Solutions. I'm Jim Goddard. Our conversation took place December 7th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.